significantly over the last 2 years. But we are seeing some signs that the space that's available is being occupied. We still have some issues in the office sector. In the retail sector, the picture's a bit more mixed and to some extent a little bit more positive. There are some sub-segments that are still under enormous pressure, but the retailers, the major retailers, are beginning to see some life come back. We are seeing some growth in retail sales, so we're hopeful that that picture the positive picture will return, certainly in the medium term, possibly not in the immediate term.
Of course, Samuel, you only released performance figures in January, but what sorts of performance are you anticipating? Are we looking at real returns for the sector?
I think we are. I think certainly in the sectors we operate in, we do see from the retail side and from the office side, we do see some good returns, comparatively speaking, given the state of the economy. I think the hospitality is still under some pressure. If you normalize out the effects of the FIFA Soccer World Cup, we do see that there's been a pattern of pressure since really the beginning of last year, of 2009, as more spaces come into the market, chasing fewer bed occupants. So there is still some way to go there before we see that return into 2008, 2007 levels. But nonetheless, we remain positive that we will see that growth come through.
When do you think that growth is going to come through, the levels that we saw in 2007, 2008? We also know there was massive development going on prior to the World Cup to try and cope with the influx of tourists and, of course, higher spend scenarios. And now it seems that some of these shopping centres and the retail spaces are sort of cannibalizing themselves and waiting to see who's going to be luring in those tenants and, of course, the shoppers first.
I'm not sure it's quite as dire as that. I think there was a lot of space on a lot of new developments on paper. Not all of those developments actually materialized, because I think the tap started getting turned off on financing a little earlier than that. Of course, the high-profile ones we hear about in East Pretoria and a couple of other places do command a lot of attention, and there is some cause for concern. But generally, we still see that there is, in the right areas, there's still some nodes that are not properly provided for in terms of the retail. A lot of space did come on in the hospitality sector in Cape Town and in the Sandton node in particular, and one or two in the Durban node as well, anticipating an upsurge in visitors, in holiday visitors. That hasn't quite happened yet because of the problems that the source countries for those visitors are having in Euroland in particular. But nonetheless, we have seen some signs of life. We have seen that we're seeing reasonable occupancy. Obviously, one's having to give a lot of good value. It's a good time to buy holidays and buy breaks at the moment. But where is it going to come from? It's going to come mainly from a recovering economy. That's not an immediate thing. We do see that there is still some way to go before the economy hits the level of growth that we need to see unemployment fall, jobs created, and therefore people with a bit more spending money. But as I said earlier, despite the difficulties, we have seen some retail sales growth. So there is still some life in the economy. And I think there's reason to be optimistic that in a 9 to 12 month period we'll see the property cycle picking up a little bit more.
Simon, just looking at the retail space, it looks like you're making big investments really at both ends of the spectrum. So you have a 1.7 billion rand refurbishment at Sandton City here in Johannesburg, but you've also just unveiled a 450 million rand wing at the Liberty Promenade Shopping Centre, and that's down in Mitchell's Plain. So it really looks across the board where you are making those investments. Are you getting tenants at those properties though?
No, absolutely. More than 50% of the space in our extension in Mitchell's Plain was really from existing tenants who were trading very, very well, asking for more space. The rest of it was from tenants who weren't there trying to get in there. So we're very, very happy that that particular property can sustain the additional investment or give us a return on the additional investment we've made. Sandton City, you say it's at the other end of the spectrum, and I suppose in terms of demographic profile of customer, that's correct. There, we also had a cry for space from our existing tenants, but what we want to do particularly with Santon, was give it a more distinctive tenant profile. It has a very good profile at the moment, probably one among the best in the country, if not the best in the country. But we saw the opportunity to bring more international retailers because of the clientele that Santon enjoys. We also saw that there was increasing densification of that area, and therefore more demand for a varied set of offerings at the middle and high end. So that's the demand we're trying to satisfy. We adopt a fairly conservative approach to our development, so we really only go ahead once there's been an enormous amount of research and we're fairly sure that the demand is already set, and we do pre-let. We have to achieve a certain amount of pre-let space before we pull the trigger. Having said that, one always has to be watchful and vigilant that the circumstances that prevailed at the time the tenants committed, that they remain committed as those circumstances change, and that is what we're seeing in both those investments.